Hello, everyone. The stock market had a good overall session on Wednesday. The Nasdaq was up 0.32%. Volume, however, was lower than the day before. And something I always caution, a little bit of a warning sign to me that we need to be careful with an uptrend is whenever green BOP on the bottom of the screen, you can see these green bars jumping up. Whenever I start to see that showing up on the Nasdaq, or actually any index for that matter, but especially the Nasdaq, I always start to get worried that a pullback our chances, let's just say, are higher that we end up pulling back in the intermediate term or short intermediate term than continuing to move higher. Ultimately, overall, though, the foundation in this market is for higher prices. So I'm not trying to top call. I'm just trying to say, watch out. We're getting some pretty bullish signals, which is normally a contrarian indicator on the Nasdaq on the short term, but still the trend is up. Russell 2000 trend is still up. You can see below the relative strength line, the white line is clearly leading the way. However, as you can also see, the MACD line is starting to get pretty outrageously bullish, which might mean that once again that a rest could be needed for this market over the short term, intermediate term trend. But still, like I said, longer term, very bullish markets. Overbought, can remain overbought for a long time. So hopefully for the bulls, that's what we got brewing here. But Nasdaq also a good day. Volume was higher than the day before, and the Dow Jones Industrial Average volume was also higher than the day before. And as you can see in the middle pane window, with that blue line jumping off, we have a legitimate pocket pivot point signal. Now, rather, I would never take them alone on the indexes, but you know, it's just something to consider in the Dow Jones Industrial Average. But overall, everything's good. All of our longs did well today. We only had one partial sell, and that's in Caterpillar. Caterpillar closed below the 200-day moving average on strong volume. So that is a 25% sell. There's been a lot of partial sells in this thing since the April lows. However, in one of my accounts, my leap positions, I haven't even touched any of those. I'm still holding all of those. However, the stock here needs to be pared back. The stock position needs to be pared back by at least 25%. And a stock that's on watch for a sell, SSTK, has closed below the 10-day moving average. Remember, if it closes below the 20-day moving average at all, it is a sell. However, since it's starting to get weak relative compared to the market relative strength wise, sell off tomorrow on heavier volume, even if it doesn't close below the 20-day moving average, would now trigger a 25% sell before even the 20-day moving average is hit. So hopefully SSTK can bounce back. And then also still under watch is Wage. Remember, Wage closed below the 20-day moving average yesterday, but did not do it on heavy volume. Therefore, the low day comes into play. 33.15 is the low a day. It closed below that, and it's a partial sell. 33.23 closed today. It keeps it safe. So we'll continue to watch that level on the next day. But overall, besides that, everything else looks great. And speaking of what looks great, these leading stocks, once again, I tell everybody, buy stops, buy stops, buy stops. If you are underinvested in this market, you pick the biggest of big caps, and you set buy stops. Break out above the most recent highs or buy. That means for Yahoo, for instance, if you have a buy stop around 27.48, you were long at 27.48 in the AM with the gapper, and you were filled around the 27.65 to 27.80 area, depending on where you got filled at and when. And overall, that turned out well. But I mean, this has been working for a lot of these stocks. CMG, for instance, is one that you could set a stop on. Apple, you could use a 50-day moving average, just giving you some random examples. REGN, you can use a breakout to a new high, have a buy stop there. Celgene, as you can see, the gap up is still working. PCYC, you can have a buy stop with above the highs here of 109.12. If it hits 110, you're long. This is the best way to play catch up if you're underinvested at this point of the rally. We are already invested, and we increasingly got long in the early half of 2013. The pullback did not shake us out of our position, so we are good. But speaking of one position that did get shaken out of, VIPS. VIPS is a new long tonight, but it's a cautious new long. Unfortunately, VIPS violated the 50-day moving average on a heavy volume. This is fine. This does not trigger a full sell, especially since we're long back here and we still have a gain. However, since we only have a small gain, from that time that we went long. A further sell up of the 50-day moving average, a heavy volume becomes a full sell. We got that the very next session on 620. And of course, VIPS built a bottom shortly after that, has come back up over the 50-day moving average, gave its 50-day moving average buy signal here on the 12th and 15th, and now it's really following through on a heavy volume move to new highs. To me, this is a breakout of a double bottom pattern, excuse me, a double bottom pattern. First low, second low. The only problem, well, actually, the second low actually has less volume than the first low, but they're both heavy overall. And overall, since taking the 50-day moving average, we're up 15%. So this is speculative stock. Therefore, in my risk account, my margin account, this will be a 2% position. However, my non-risk account, this is going to be a 1% position. And at the same note, in the risk account, it's going to be half is going to be a market order and the other half is going to be a limit order around the mid-range of this intraday bar. And you can see with it opening at 33.10 and closing at 35.78, that's going to ballpark it around the 34.30 level. So there you have an idea of where my limit order is. But, you know, it's got to be small because an 8% move in one day is a ton, and a 15% normal retracement back to the 50-day moving average is a pretty big loss to sustain. So it has to remain 2-1. Can't get crazy, even though it is a 99 or a 98 EPS stock with some huge earnings and sales growth. And AMBA is either a 99 or 98 EPS stock with also huge earnings and sales growth, and it's giving an add signal. Pocket pivot point buy signal today. This is a breakout to new highs. If you would have set your buy stop, let's say at 18.11, you were long intraday at 18.11 and you're doing really well with the close at 19.24. However, those of us that do most of our trading on an end-of-day basis, this is a good end-of-day signal. However, once again, it is a bit too extended. Therefore, it's going to be 2% in the risk account. Half of that order is going to be a market order. The other half is going to be with a limit order right around the 18.25 to 18.50 level. And also, it's only going to be 1% in the non-risk account. And I would like to set up a limit order, but I haven't decided quite yet. And if I do, it's going to be around the 18.68 level in that account. But I still might go market order on that because AMBA might be ready to fly. But we'll see what tomorrow brings, or what today actually brings for everybody watching this. Aloha.